What is the most iconic motorcycle in the world? Harley Davidson. And their stock has performed poorly since the 2000s really. You have lost a lot of money on the stock. But low PE ratio, then of course it's always interesting for people. The revenue has went nowhere and it is declining recently. Even worse when it comes to operating income, they just have been bleeding and bleeding and bleeding. They had a small recovery after the pandemic, when demand that was not fulfilled here was just pulled back. Now, one good thing you have are the share buybacks. They buy back a lot of shares because their shares are trading so cheaply. And because they're currently still generating free cash flow, 800 million at the moment, they can buy back a lot of shares. However, it is starting to look worse. When we look at the latest quarter, they consist out of Harley Davidson Motorcycles, Harley Davidson Financial Services, and Livewire. And as you can see, they lost a lot of money in Q4. Only their financial services was profitable. That is basically them giving you a motorcycle loan or insure your vehicle. That is highly profitable. However, everything else, not as much. And that has been consistent for some time. Harley Davidson Motorcycle has been doing very poorly recently, but Harley Davidson Financials has kinda buffered that out. Now, what about Livewire? What is that? It's the electric bike segment. And it is bleeding cash. 110 million on the full year, while basically giving no revenue. There are multiple reasons why these quarters were especially bad. First of all, dealer inventory. After the pandemic, a lot of bikes were bought. Dealers thought, oh, Harley Davidson's back, we need to stock up inventory. Well, it went nowhere, they overstocked massively, so the dealers had to reduce stock. So even bought motorbikes didn't go down that much, because the dealers didn't buy more. Harley Davidson massively lost revenue there. We can also see this in unit registration. They were around flat for the year overall, but revenue collapsed. When we look on the long term, we can see Harley Davidson is just in a perpetual decline at the moment. It is just not the brand for the newer generation. It's one for the older people, and they're slowly getting out of motorcycles. And you can see this from the market share over time. It is just in a perpetual decline. And financials cannot mask this problem forever anymore. They loaned out a lot, but now after the free money times, credit losses are going up, especially on something as volatile as motorcycles. Now, it is not extremely high, 3.3% is still fine, but still, this is an issue, because this is the thing keeping this whole company together. And Livewire, you shouldn't bet on them saving. I mean, honestly, look at this bike. Look at this bike, I'm sorry, they delivered 600 bikes in the entirety of 2024. They lost 110 million. This is dragging the company down in the medium term, at least, in even long term. Until this becomes break even, it's gonna be a very long time, if ever. So do not count on this on saving you. Count it as a negative in this calculation. Now yes, cash flow is massively up, and especially compared to the net income. Why? Because write-offs on the debt and provision for credit losses are not calculated in here. They get added back on the cash flow, because basically what they say is, we know we're probably gonna lose the money on that loan, so we're gonna put it into a reserve. And here they said 250 million, which is a lot of money, but it's not spent money yet, so it's not calculated in the cash flow. So realistically, that 867 million should be around 600 million of free cash flow. Still only a 5-time multiple, so very good. Now, and then many people do the calculation, what happens if Harley Davidson just kinda like plateaus from now on? They just kinda keep their market share. Well, what do you get at the moment? Currently you get 8% in share buybacks, because the stock price is very repressed right now, but usually you get around 5 to 7%, plus a 3% dividend. So overall, if Harley Davidson stays stable from here, you're gonna make around 8 to 10% of the dividend and share buybacks. No growth in the underlying business, so you're only gonna get the 10%. Now 10% is not a bad investment, but on a dying company with the potential of slipping further, that is not good. Now, what could help you in the short term as a Harley Davidson shareholder? Them gutting Livewire. That is $110 million per year extra. That would immediately pump the stock up. So, if you play on a stabilizing Harley Davidson with Livewire maybe sold off or just completely stomped in, then yeah, maybe this would make a quick buck. But overall, I just don't see the numbers working here. We're gonna go into a quick calculation on why I don't find it very interesting. If we take off those provisions of a free cash flow, they will make around 600 million of free cash flow. That's around 4.75 per share at the moment. What can we assume? I just count with a 2 to 3% perpetual decline. At the current stock price, they can buy around 7 to 8% of shares. So let's take that into the calculation. 5% free cash flow per share growth after revenue decline. Slight slowdown after that. Terminal multiple 7. There could always be like a revival of Harley Davidson. It happens all the time with nostalgic brands. but it's not a great company. It's just in a perpetual decline. For now, I think a 7 is fair. A 17% payout ratio with a reduction due to taxes. You can't do around where it is right now. So, it's not horrible. You could get a 10% return, but it has to be a slow decline over time. And over the last times, it has kind of been a heavy decline. What if it declines by 4 to 6%? 3% growth, 2% after that. Oh, why is that a 10 multiple? That's wrong. That should be a 5. 5 multiple. Then we come to $17 a share. So, and that always assumes that Harley Davidson doesn't run into issues. If their financials business suffers huge drawdowns, the net debt is gonna go way up. Then they can't do share buybacks because their debt load is already fairly heavy. Now, however, what if a company stabilizes? You get your 7% share buybacks, 10 multiple because it's a stabilized company. You don't even have a double. And for companies that are at harsh risk like this, the best case scenario should at least be a double. I made a video on Western Union, a company also currently in permanent decline. And there, the thesis is that if the business stabilizes, you have an easy double. More than that. With Harley Davidson, you don't really have it. I'm not really buying it. I don't see anything in the stock. It's just extremely risky. Maybe a short-term play on Livewire getting stomped in. Maybe it's an insider thing, if you got some insider knowledge there. But overall, I don't like the stock. I don't like the company. Whatever you think, right down below. Have a good day.